Hi everyone, today let's get straight into the data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at the fear and greed index, you can see we were flat at a 20. Really, that should have gone a little bit lower. Still in extreme fear. You can see markets continuing lower. We got the rejection off of that 125 EMA, so continuing bearish. Extreme fear here on momentum, and then strength still hovering. Breadth trending lower as it has been doing. And then we got put call ratio up at 0.9. Want to see this push up to 0.99 or potentially all the way up into the 1 area. Above 1 they say is considered bearish, and we are definitely getting close there. And then volatility continuing to hover around that 27 area. I bet it spiked up a little bit again at the end of the day. And then safe haven demand and junk bond demand both in extreme fear as people continue to buy up bonds as we get closer to that first rate cut next month. Moving over to earnings, Walt Disney came in and beat on the top and bottom line and raised prices. They did well there. Monster Beverage missing on both, not great for them. Marathon Petroleum missing on the bottom line, beating on the top. CVS missing on revenue, beat on earnings. So overall, not bad. And then looking at tomorrow, you got Eli Lilly, Gilead, Trade Desk. Eli Lilly is in the morning, Trade Desk in the afternoon. And then for Friday, just Evergy, Home Depot Tuesday next week, Cisco Wednesday next week. And we're pretty much done here for this earnings season. And then moving over to Max Payne for the NASDAQ. For some reason, Max Payne's not working for the SPY right now, but look at this put call ratio, very low at 0.97. Total options only 500,000, but we are way below the Max Payne price, 432, bottom of the calls basically right there already, and price seems to be going lower after hours. Do have a decent call wall there at 430, but again, that is for Max Payne at the end of the week. Could see this go a little bit lower as I do expect it to, and then maybe bounce into the Friday depending on what we see, but right now very bearish finish for this week at current levels. Moving over to the charts, starting off with the S&Ps, you can see we tried to rally up once again. Pre-market, huge move higher, got all the way up to about 1.7% on the S&Ps, and then gave it all back and finished down 0.67, momentum bearish, RSI bearish. Seems like we're going to head at least to a double bottom, so that would bring you to a price target of around 510. 509.77 is the level. You can see you do have one level in between here at 513.27, but this is a straight move down basically throughout the session except for that first candle of the day. So everything looks bearish. Touched that 531.47 level, immediately sold off. And you can see here fully engulfed the previous candle. Expect more bearishness, and you can see down about $2 after hours. So everything looks pretty bad. Expecting more downward price action tomorrow. And if you consider this gap down a move lower, this looks like a bear flag, and now we're getting the breakdown, so expect lower lows to come. And then moving over to the Tasty charts here, you can see that breakdown that we were just looking at. Lowest ATR band would be your price target. That's at 504.83. We're almost to that low close from that previous dip, which is at 515. Would expect to touch that at least in the after hours or pre-market. We're very close at 516.60. And then below that, if we do get that lower low, that's going to be all the way at 504.83. So bearishness to come, not a ton of volume happening here. Volume weighted MACD is slightly bullish, which is interesting, while price is continuing to go lower. So that would indicate to me maybe this next bounce is the bottom, but we'll see how it plays right now. Seems to be accelerating to the downside. And then moving over to the NASDAQ, very same thesis here. Rallying price action, slightly higher high, got above 446.66, just missed that 450 level, filled the gap as we were expecting, and then immediately sold off from that level. Took out a bunch of levels. 433 was the last one. It's down after hours, just like everything else. 428 is the next level, but looking at that pre-market price action from Monday, that would take us down to 423.70 or so, or another $10 at least. And then looking at that daily chart, you can see 200 SMA sitting at 430.65, so we are within just a 0.5% of there, expecting to touch that at a minimum. And then you can see that trend that we touched on the Monday session, that would bring us down to around 426.25. Volume continues to be big on this selling action, momentum bearish, everything still looks very bearish. And just to give you a frame of reference, we're seeing prices that we had back here in mid-May, or even all the way back here in that first or second week of February. And then looking at at the Tasty charts, you can see that lowest ATR 416.60. So that would give you just a little bit more price action below that previous low. You can see the NASDAQ is actually holding up a little bit better than it did than the S&Ps off of that dip, which is interesting. I still think we're going to get into that range. The S&Ps are almost there. The NASDAQ has a little bit further to go. The low close is around 426.80 here, and you can see we're at 432, so about another 1% lower. And if we hit that lowest ATR band, that's going to be 416, which is about another 4% lower from current price. Moving over to the Russell and the Dow, the Russell was down 1.18, the Dow was down 0.56, momentum bearish, RSI bearish. So really nothing's changed. Went up and tagged that 55 EMA, got a full touch on this candle, just missed it yesterday, and now we're at the highly traded zone. 102.88 was the level, closed just above it by 10 cents. After hours, we've fallen about 50 cents. So 189.75 would be the level. If we broke 201.88, and then the 200 is where we touched on Monday, and that's trading at 197.57. So we'll see if we get back into that zone. That's the lows back here from mid-June. Fully round trip this move. Got a slight bounce, almost touched those highs, and now we're going back down again. Didn't fill the gap like the other major indices, and again, looks a little bit bearish, but not as bad. And then looking at the Dow, similar thesis. 387.77 is the level, selling just a couple of cents there after hours. If this zone breaks down, though, we're probably headed to 382.20. Maybe you find a little support in the mid-range there at the low from Monday, but this does look bearish. Moving over to the Mag 7, you can see down 0.98, selling after hours, another $2. Probably headed to the highly traded zone, 239.60, if not all the way down to that 230.50. Got the 200 sitting there at 234.21. Either way, this still looks bearish. Nothing crazy happening compared to the other major indices. And if we do get that continuation tomorrow, it's likely to be pretty aggressive in my opinion. Moving over to Apple and Microsoft, you can see Apple up 1.25%, holding those gains, got above the level, 207.14. I think Apple is being seen as a safe haven here, throwing another wick to 211.55. Seems to be selling a little bit after hours like everything else, but structurally it's in much better shape than a lot of these other charts, especially when you compare it to Microsoft here, which was down 0.3, falling after hours. 394.22 is the next level, probably going to push to 388.03. Tested the 200 again, gave it all back. So it seems like more selling is set to come. Maybe you get a bounce from there, but this is distribution. We got the fake out. Now I think this is going to break down into a longer term down move. Moving over to Tesla and NVIDIA, both of these were down a lot, 4.43 and 5.12, and both of them are falling after hours. 188.50 here is the level for Tesla, probably going to break that, touch the lows from Monday, potentially push down to 177.70. That is a critical zone because that was above this consolidation. If we break down one more level, we're going to be in the middle of that. Momentum bearish, RSI bearish, like everything else. And then NVIDIA here tried to go positive, ended up giving it all back and then some, falling after hours. 95.74 is the level, and then you got the 144 EMA sitting there at 94.73, expecting more continuation lower, potentially all the way down to that 90.63 area, and then we'll see what happens from there. Is this going to be a left shoulder head, right shoulder, or is it just going to push right through those levels? I would guess we probably get at least a right shoulder. Moving over to Meta and Amazon. Interestingly here, Meta was down today 1%, while Amazon was up 0.5%. The previous day was quite different at 3.87 up for Meta versus Amazon's up 0.5%. But you can see here, Amazon doing worse in the after hours price action, fully engulfing yesterday's candle, pushing to that 159.89 area, and then probably going to push down to that 153.50 level. Momentum bearish. RSI is definitely extended, but it is bearish at this point for me. And then looking at Meta a little closer here, got the 21 EMA sitting at 483 as support, right in the same zone as everything else. I think it's probably going to sell with markets, but I would still expect Meta to hold up a little better than everything, at least in the short term. Moving over to staples and discretionaries. Staples hanging in there, 0.1, selling a little after hours. Nothing crazy, still in the same zone it's been in since all the way back here on 17 July. And then look at discretionaries, down 1.74, selling after hours, 166.78 is the level. It's stuck right here at the lows from mid-April, but I expect that to break, touch this previous level here, and then this is a super bearish structure, falling knife at that point. Maybe we go back and fill this gap from November, which would take us down to that 162 area. Then we'll see what happens from there. Everything looks quite terrible, except for those those safer sectors like staples. Moving over to utilities and financials, these two hung in there pretty decent, 0.56 and 0.12. Again, safer sectors are still hanging in there, if you can call it that. Financials did fall from 44 all the way down to 40, so that's about 7.75% down move, and since then we've bounced back into this consolidation area. Momentum bearish, RSI still bearish, but either way, both of these look like a better place to be than tech or anything with risk at this point. Moving over to oil and gold, kind of been skipping these because they haven't been doing too much, but oil catching a bounce here at that 73 level. We've been consolidating for 3 days, momentum stepping to bullish. Interesting. Maybe markets are not so convinced that a recession is happening immediately, or maybe this is just one up candle and then we're going to get two immediately following it to the downside. But that's a pretty decent step. Closed right at the 9 EMA. Maybe we see a little bit more push to 77 there on oil futures. And then looking at gold, still hovering in the same zone it's been in, 220 after giving back these two previous tops, which looks like a high, lower high, or a double top. Looks a little bit bearish there. Momentum bearish, RSI bearish on gold. Moving over to 20 and 50-day breadth. Both of these were bearish as we expected. I think we're probably going to get that washout tomorrow. Push back down to that 23.90, 24 area on 20-day breadth, and then 50-day should push down to that 40 probably tomorrow, honestly, on both of these. Momentum bearish, RSI bearish. Moving over to the dollar, another update here on the dollar, 0.25, holding this level, momentum swinging to bullish. Interesting to see the dollar holding some of those gains while equities were falling here today. We had been seeing the dollar move with equities over the past couple days, but now we're back to the inverse, and it does look a little bit bullish. So if that continues, then we should see some more bearishness on equities, or maybe we're just going to consolidate here, a little bit of a pullback in time, waiting for these EMAs to catch up. Overall, this should be a zone of support, the same level we were here back in March. And you can still see that high, lower high, low, lower low setup. So see how it plays. Doesn't mean we can't establish another lower high, but overall still bearish. Moving over to JNK and TLT here, you can see JNK actually held some gains, 0.15, even after gapping higher and falling. Momentum stepping slightly back to bullish. Honestly, this just doesn't mean that much to me. I think we're going to be stuck here for a while on JNK. And then looking at TLT, this did gap lower in doji. I would expect it to hold this zone and start to see a little bit of a rally from there. Momentum says it should go lower, but this is still an overall uptrend, and I still expect it to bounce a little bit from this zone. Moving over to volatility, bond volatility did continue its sell-off a little bit. Seems like bonds are settling a little bit more. But looking at the VIX, hit that 9 EMA, hit the 2250 level, and then caught a bounce, ended up positive on the day, expecting at least 1 or 2 more spikes on that. 37.50 is probably the price target. Maybe we just touched 33.86. Either way, I think we're going higher. If we were to break those levels, the next one would be around 44. Let's go ahead and add that level, which is the highs back here from June of 22. Moving over to my accounts, of course, I got demolished once again. I have just been a garbage trader over the last couple of weeks, and today was no exception. Fortunately, I did take off all of my Q's positions into that after hours sell-off, and I do expect more selling from that tomorrow. And then looking at the Russell, continuing to hold this since it is in my Roth IRA. I'll probably hold these shares for the next couple years, honestly, and I can just continue to sell these daily options. 202 for tomorrow for $2 credit for about a 1% protection. Not sure why it's not showing the price there, but it should be in a slight profit. I sold it a little bit before the close, and then it sold a little bit into that close. So either way, playing a lot of protection. Honestly, should have sold probably the 201s, as things are probably going to sell off, and you can see they did sell off about 40 or 50 cents after hours. Let me know down in the comment section what you think of markets. How much lower are we going to go before we find some kind of structure? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.